Hi everyone, I'm Jeff Hirsch. I'm here with my friend Marvin Appel, the head honcho at Systems and Forecast newsletter and also seasoanlity.com, creators of MACD. His father Jerry Appel started it all, MACD, for those of you that use it that way. And let's talk about the stock market. I know you said you were biting your nails a little bit, but your models are positive, so we all know we got to listen to models and not our emotions. But so, what are the models? What are the signals telling you?
All right, our model, our main intermediate-term U.S. equity model is still on a buy signal, suggesting that we should ride out the correction that we've had, and that historical precedent suggests that we shouldn't significantly extend the low that the S&P 500 hit on October 29th. So,
or get to the one from back in February, March, depending on what you're looking at.
Exactly. Yeah, I wouldn't expect it. I mean, at least historical precedent doesn't suggest that we're going to get that low. One of the key bullish indicators is one that's near to your heart,
yes.
is seasonality. We are at a time in the presidential election cycle that has historically been uniformly favorable for stocks.
We call it the sweet spot of the 4-year cycle.
That's it. Okay.
3 quarters here from Q4 to Q2 of the pre-election years.
Exactly. So I don't think that period has had a losing epic since World War II. So we have some ground to catch up.
Even in bad years, that period still did well, like in the Vietnam era, 66 and stuff. So I'm with you on that.
Yeah, so that's one of the important indicators. MACD is interesting. Our model uses longer-term MACDs, which, by the way, are also still on a buy. But the intermediate-term MACD, particularly, let's say a 4 to 8 week MACD or a 19 to 39 day MACD on the S&P 500, basically the same time frame, is suggesting that we could see a setup for a bounce. And we're not there yet. We're not so oversold that we could get that bounce. But for example, if you look at the 4 to 8 week oscillator, if it gets below minus 2.5% and then recovers above that threshold, that's been a good intermediate-term bottom-finding indicator for past corrections in major bear markets. And we're not oversold enough yet to get that as a possible rebound, but it's something to watch. Our 1939-day MACD is still on a sell. That's something that traders could look at to look for a reentry. You'd want to see not just a simple crossing of the signal line, you'd want to see some kind of confirmation, either a rising double bottom or a positive divergence with price or something like that.
In the actual equity underlying index itself?
Well, a confirmation actually in the MACD, in the MACD. Okay. Basically a rising double bottom at the very least, right. With or without a positive divergence with price.
So technical analysis of the technical indicator.
Yes.
I love it. So we had our buy signal on October 31st using the old 817.9 MACD with the Dow, the S&P, and the NASDAQ all in agreement after that nice sell-off there. So nervously bullish on the market.
Exactly. I am nervously bullish.
From the previous talk, still showing positive for equities as well in the economy.
Yeah,
yes. But a little bit sort of on the edge. And
high yield bonds are on the edge, and investment grade bonds are sending
on probation.
They're sending a good signal for the economy. So it's really looking at the investment grade bond markets now. It's about valuation. It's not about recession.
That's right. All right. Thanks, Marvin.
Thanks
everyone for joining us.